China is standing firm against America on trade. Russia is standing firm on its war against NATO in Ukraine. And Iran is standing firm against America on its ability to enrich uranium for peaceful purposes. That is the global background that we should be well aware of, because if any one of those escalates, and I think that they all will escalate, then the complacency that embodies investors globally will be blown away. Whether that happens this year, next year, or the year after is a different question. But for the immediate future, I think the risk that Iran will be attacked either by Israel on its own or by a joint exercise between Israel and America. When that happens, some of the complacency in markets will be destroyed. And of course, what does that imply? It will imply very high oil prices. As part of Iran's retaliatory moves will be to shut down the Straits of Hormuz, through which 20% of global oil supplies are shipped through. Washington is very worried by two specific developments. The first one is that China has the most competitive and efficient manufacturing supply chain in the world. Now, what they are implanting on that efficient structure is automation, robotics, powered by AI, to make manufacturing chain super competitive. Already you have in China factories run by humanoids, no factory workers anywhere in sight. What does that mean for costs, the prices of goods that they sell? And it de facto increases their capacity. That scares the living daylights out of the policymakers in Washington. The second fact that worries the Pentagon is that China is usurping America's military dominance in a wide range of equipment, particularly in airspace. So you add the two together, it means that the principal foreign policy in Washington is to strangle China. This complicates issues much further because China, Russia, and Iran operate hand in glove, constant dialogue. If you do this, we do that, so on and so forth. So their plans are all coordinated. Gold reflects geopolitical pressure points. Therefore, what gold is telling us is that something is going to break somewhere in the world, whether it be against Iran, whether it's the trade issues against China, or whether it's Ukraine. But there's a bid under gold for this one simple reason: it reflects geopolitical pressures. Therefore, as we move into the next 2 or 3 years, these pressures are going to increase, and thus we should think of in gold we trust. The sense I get is that as the Gulf countries have been dominated by America for so long, that their primary policy will be to support America. That said, I believe they have told America that should there be an attack on Iran, you will not be allowed to use your bases in our country. Again, being typical Arabs, they hedge their bets. UAE is a member of BRICS. Saudi Arabia is not yet a member of BRICS, but they've moved in a different direction, which is very interesting. The Shanghai Gold Exchange is building gold vaults in all of the BRICS countries. And I believe that the vault in Saudi Arabia is very close to completion. What does this mean? Saudi sells oil to China. China pays for it in CNY. China also exports a lot of goods to Saudi Arabia using CNY. So Saudi Arabia holds a surplus of CNY. They can now hedge that through the Shanghai Gold Exchange gold vault in Saudi Arabia. This is very close to what has been happening between Russia and China, because Russia exports more goods to China than China does to Russia. How is the differential held? By gold in a PBOC vault. So gold through the back door is becoming an important asset within the monetary system. The initial reaction of base metals like copper will be to sell them off, because what wars will do will be to decimate economic activity on which the base metals depend for demand. So I think the initial reaction, taking copper as an example, will be to see prices falling from the 7,000 level to around the 7,000 level by into the early months of next year. And then central banks, governments throw everything into the sink to revive recovery. We then get this 24-month inflation-driven recovery in which copper prices and other base metal prices will double in value. It was America freezing Russian assets that woke everybody up. And since then, the BRICS Sherpas have been working overtime to develop not just their new currency, which will have a gold base to it, but the BRICS Development Bank, a whole stream of institutions that basically will rival those in the West. So many people think nothing will emerge from next month's BRICS summit meeting. I disagree. I think we will see policies emerging from that meeting that will point the way forward. The problem is going to be in reaching a unanimous decision, because America is wooing India very strongly. Under the BRICS Charter, you have to have unanimous decisions. I mean, I asked an Indian friend of mine who's well informed, I said, for how much longer can Modi do the two-step dance? His answer was, until he has to finally stop the dance and make a decision. So it's very clear the policy emerging from Washington is an attempt to destroy BRICS before it becomes a real risk to the American-led hegemony. Initially, the thinking was we can do it by attacking BRICS as a frontline attack, as it were. But it seems that the policy is switched. Let's take one at a time. Get one, and then maybe we can get the other two big players. But as I said before, the three major players versus America are all coordinating their policies. The first thing is that all the optimistic forecasts about the US, Europe, and the global economy will be thrown out of the window. Secondly, there's enormous complacency in financial markets. The fact that you have a war breaking out will probably burst that complacency. And particularly, don't forget that Moscow has stated very clearly, and Putin directly to Trump, we are going to retaliate strongly against your attacks on our nuclear bombers, which were located in the open on airfields in compliance with the START Treaty to which you signed. So we have yet to see that retaliation. We've had minor ones, but not the real one yet. That is coming. Because NATO was involved in these attacks, because they could not have been undertaken without the technical expertise and the satellite surveillance that is available to NATO. Under Russian law, they would have the right to attack any NATO member country that was involved in these attacks on their nuclear bomber fleet. But I think if they did that, it would really open a very nasty can of worms. So I think that when this attack occurs, it's going to obliterate any military installation, whether Ukrainian or NATO, such as the NATO bunkers. They are going to destroy them. Inflation always runs in cycles, and we are approaching the bottom of the inflation cycle. But a combination of war, energy prices rising, food prices which are already rising. I mean, for instance, I just looked at the FAO's food price index. Year on year, it's up by 6% globally. You've got meat prices up 7%, dairy prices 22%, and vegetable oils up 19%. So it's already starting. So by the time we get into early 2028, if not in 2027, US and global inflation will be well over 10%. What does that mean to long-term bond prices? They will be in double digits. And what does that do to the global system? That's highly leveraged with debt to GDP at over 3 times. The wheels come off. We're not in recession. We're in something worse. And we'll see big smacks to equity and base metal prices, just to name two. What you're looking down to the barrel also is that the banks, the pension funds, and the insurance companies in America will be forced to hold a set percentage of their assets in US treasuries. So you are monetizing the debt.